Welcome back to our channel. Today, we will learn about some basic accounting terms. You probably have heard terms like capital, liabilities, assets, loan, interest, and many more. If you don't know these terms, then don't worry. In this video, we will explain you some of the basic accounting terms in a simple language. Let's start. Capital. Capital is the amount of money invested by an owner in the beginning or during the life of the business. Capital can be in the form of cash, machinery, vehicle, furniture, land, building, and others. In general, there are two types of capital: debt capital and equity capital. Debt capital can be obtained by taking loan from bank or by issuing bonds. In the same way, equity capital can be obtained by selling the shares of a company. Liability. Liability is the amount of money payable by the business to the outsider on a specific point of time. In general, there are two types of liabilities: current liabilities and long-term liabilities. Current liabilities are payable within 1 year. It includes short-term loans, outstanding expenses, amount payable to creditors, bank overdraft, and others. Long-term liabilities are payable in more than 1 year. It includes long-term loan from bank, bonds, or debentures issued to public. Liabilities are used to acquire assets and do operational works. Assets. Assets are economic resources owned by the business for the purpose of generating income. A business acquires assets by the money it gets from equity and liabilities. Therefore, the value of asset is equal to the sum of equity and liabilities. Cash, bank balance, inventory, furniture, vehicle, land, building, etc. are some examples of assets. Assets can be classified in many ways. According to convertibility, physical existence, usage, and others. Current assets are assets that can be easily converted into cash within a year. It includes cash, bank balance, inventory, bills receivables, amount of debtors, prepaid expenses, and others. Fixed assets are assets that cannot be easily converted into cash and are purchased for generating more income over a long period of time. It includes building, plant, machinery, vehicle, furniture, long-term investment, etc. Tangible assets have physical existence. We can see or touch these assets. It includes cash, inventory, machinery, furniture, vehicle, land, building, etc. Intangible assets do not have any physical existence. It includes copyright, trademark, goodwill, patent, intellectual rights, etc. Operating assets are assets that are required in the daily operation of a business. Cash, accounts receivable, inventory, building, machinery, equipment, patents, copyrights, goodwill, etc. are some operating assets. Non-operating assets are assets that are not required for daily business operations but can still generate revenue. It includes short-term investments, marketable securities, vacant land, interest income from a fixed deposit, etc. Income. Income refers to the revenue or earnings generated by a company through its various operations, such as the sale of goods or services, investments, and other sources. Sales revenue generated from selling goods and services are the main source of income for a business. Other sources of income are rent income, dividend income, interest or commission received. A business always tries to generate more income from its resources. Income over expenses brings profit. Expenses. Expenses are the costs that businesses incur to run their daily operational works, maintaining assets, and others. Here are some examples of expenses. Expenses can be classified in many ways, such as operating and non-operating expenses. Fixed and variable expenses. We will bring you topics related to these subjects in the near future. Make sure you subscribe to our channel. Thank you.